and I was talking to Bob Prechter, the owner of the firm, the other day, and I said, kind of in a joking manner, since probably 1990, definitely since 1993, I've not changed the way I look at the market at all. I still use the wave principle. I don't use anything else. I haven't added to it. I haven't changed the way I apply Elliott. I use the exact same methodology. I think about the market the exact same way now as I did then. And I'm still here. These are my credentials. I didn't mention what I studied in school, but this is my credentials. I have mastered this book, which you can buy at Amazon. And I've mastered, if I can get this to go, this book. But I was grabbing these slides offline the other day. I noticed there's several versions of these. Sometimes it's Little Ernie. Other times it's Big Bird. And you're free. Any of those will do the trick. So you don't have to be, to use Elliott, people tell you, oh, it's so difficult. To me, it's just the simplest thing in the world. This is the Elliott wave. That's it. I did a presentation. I don't come out much and do these things. The last time I spoke was 11 months ago to an audience much like this, but in New York. I had 45 minutes to speak. The guy before me was an economist on the street. He was talking about things very complex, very complicated, lots of inputs. He made, during his presentation, he kept referring to his model. And he kept saying, oh yeah, before I go to bed at night, I have to run my model. I have to put the new input numbers in. I have to run it. I have to see what the results are or I can't sleep. So I got up there and I said, that's my model. That's it. That's a bull market. That's what a market looks like when it's going higher. If a market's in a bear trend, just flip that over. It falls in 5 waves from your upper left to your lower right. That's a bear market. That's all Elliott is. That's my model. Now it's getting a bit complicated. Take a look back at the previous slide, and you'll see this is 1, 2, 3, 4, 5. And we'll go back forward again. And you can see that that's just the first wave in your lower left. And we put a larger 1 over there. Because as these waves break down, we start having perspective. You've probably all heard of fractals. And Elliott is all about fractals. He was talking about fractals back in the 30s before it became popular in the 80s. We've built whole sciences around it now. He was talking about it much earlier. Because let's just pretend that this first chart is that would be like, say, a daily chart. And you'd see a pattern like that. So when you went onto a weekly chart, you might see this pattern. To where on the daily chart, it was just the first wave of something even bigger. It's a growing thing. It tells you that there's growth in things, that we can look to the past to predict the future. The future also helps you confirm the past in terms of wave structure. If you look at, and we'll go through this more later, but this is just the briefest of introductions to it. If you look at wave 2 in parentheses, it's ABC. You'll notice after we finished 5 up, you have another big ABC. This same sequence of 5 moves in the one direction followed by 3 trends against that direction happens over and over and over again, just continuing to build upon itself. This could be a 1-minute chart with all those waves on it, and I've followed the coffee market for a while and would use a 1-minute chart to help some clients who were making decisions on that kind of scale. I learned to do it with using weekly and monthly charts. So this could be a 5-minute chart, 30-minute chart, hourly chart. You're going to see the same patterns everywhere. So what we're trying to do is just master 5s and 3s. Again, and that is the Elliott wave model of a bull market. Bear market, you would flip it over. And if we can figure out where we are in that sequence, we can just follow it along for a long period of time because we know this basic pattern.